we're really getting to a really critical turning point for the dollar and precious metals in general. People are waiting on a breakout. They think the breakout's about to happen. We haven't technically started a new major uptrend yet for metals. And what happens with the dollar here going forward in interest rates, I think are going to decide what gold and silver are going to do.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us kaiser@milesfranklin.com.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah.
Definitely. Now, I'd like to get your perspective, I guess first on a technical level, what does this recent rally we've seen last week in precious metals mean for the metals? And we're recording this on Thursday, May 13th. So your perspective on what we saw last week.
Yeah, so last week we saw a nice move up in metals. The US dollar was under some pressure. We're really getting to a really critical turning point for the dollar and precious metals in general. There's a lot of things coming into play. Overall, when we just look at the daily chart, the precious metals and miners are in a short-term uptrend. They're making a series of higher lows and higher highs. But when you zoom back and you look at the bigger picture, obviously the precious metals sector has been under pressure for 8 months or more, trending lower, especially gold and gold miners, and they're coming up to a really significant resistance area, which is really interesting because this is a major resistance zone for gold miners, and silver, and we're seeing the U.S. dollar fall down to actually support levels. And so now there's rumors going around that the Fed's behind the curve, that they're going to need to aggressively increase rates. So if they increase rates, that means usually the U.S. dollar is going to do well. Currencies go up if they pay a higher interest rate. And so if the dollar's at support, metals are at resistance, and something like that happens, we're going to see the metals market pull back and consolidate. And not really, people are waiting on a breakout. They think the breakout's about to happen. We haven't technically started a new major uptrend yet for metals. And what happens with the dollar here going forward in interest rates, I think are going to decide what gold and silver are going to do. Are they going to continue to trade sideways and pull back for a few more months? Or are they going to break out and start this new mega leg to the upside? So that's the big tipping point we need to keep our eyes on.
Definitely the big picture right there. Would you mind sharing the gold and silver charts as well, kind of looking at key price points you're looking at to see if we break below them, that could go back into a downtrend, or price points also for resistance?
Yeah, so I can share my screen here if you want to see that. And if we take a look at gold, I can draw a falling trend line just across these highs to the downside, and you can see gold isn't quite at the kind of a high yet. We're getting close to a resistance zone. You could argue, you could base it on a closing bar, open or closing bar on these charts. You can see we're pretty close to that resistance area. The gold chart on the daily here is a series of lower highs, lower lows. We're coming up to resistance, and we have yet to really kind of break this really major correction in the market. Now, if we were to go and take a look over at silver real quick, you can see silver's been trading in a more of a sideways pattern. It's really kind of trading in this big range. And until it kind of really breaks somewhere above 28, 29, ideally, above 30 will be the really clean breakout. We're still kind of just drifting up to these recent highs that we saw back in February. we saw back in January, and then these highs over here from late last year. So we're definitely seeing silver move up into resistance. And it's similar for the silver miners and the gold miners. If you look at the gold miners, they are also trending down and across these highs here, which is going to act as a fairly significant resistance zone on the chart. So that is kind of the view of where they're trading. They've had a nice run. They're in an uptrend on a short-term basis, but this major pattern here is still kind of a big struggle for them to break above those. And if we were to look at the US dollar index, I don't have the US dollar index. I've got the ETF that's supposed to somewhat mimic it. But if we take a look at it, we're seeing the dollar. The ETF doesn't actually show it too well, but more or less the low that we saw back here in 2018, the US dollar is actually trading down around this area as well. And if we were to draw a resistance line across the top of here, we've got this upper range for the dollar. So it's kind of oscillating in here. Now, the ETF doesn't quite show it as nicely as the real US dollar index, but more or less the US dollar is trading down here at support. And if we see potential rates continue to rise, we see the Fed want to raise rates, we're going to see the dollar, I think, rally and come to the upper end of this channel again, or at least put in a significant rally. And that's going to send gold, silver, and miners back down away from those falling trend lines that I showed you. So that's kind of the view we're at. We're close to a big breakout in the metals sector. I can feel the energy building in that sector, but it has yet to really, break out and confirm that it's starting a new trend.
And how low are you looking for gold and silver to fall in this next move?
If we were to look at gold, it really depends. I think gold could continue to fall down somewhere around the $1,600 level. So obviously it's at $1,822 right now. Based on the current price, we'd be looking at potentially another 10-12% drop in gold. And that would be a pretty complex correction. It would still be holding up above some key moving averages, but we just have to see. I mean, if it gets to 1,600, it's going to be a very critical support level that it needs to hold going forward. Anything below that, it's going to be doing a lot of serious damage. But at this point, this giant bull run that we've had since 2018, this bull flag is still in balance with the size of this bull flag. So it could potentially chop and move down a little bit, but it really does need to start to get traction this year over the next few months. This is the monthly chart. So as you can see, it could only take 1 or 2 months to come down, test that level, and then it could rip to the upside and take off. So I think, by the end of this year, we're going to have a very significant, move on our hands in precious metals. Eventually, it'll be to the upside. That's what the super cycle trends are showing. We're looking forward 3 to 5 years from now, much higher gold prices. And this pattern on the monthly chart is also very bullish, pointing to higher prices by the end of the year.
And you mentioned earlier how gold and silver are kind of diverging. Gold, we've been seeing this downtrend, but silver just going sideways. So what do you think is causing that?
Well, sometimes just different pockets are more, they have more strength. They have stronger relative strength. So when you look here at the silver chart, the gold chart flagging down, if we go to the silver monthly chart, you can see it's been kind of trading in this sideways range, definitely a lot percentage-wise more volatile, but it's holding up in just a tighter consolidation pattern. And the fact that it's holding up is a sign that when it does break out, it's most likely also going to run further to the upside. So I think there's a lot more upside in silver, also in silver miners, than there are in the gold miners. But both of them have a very strong pattern. You could argue both are very strong bull patterns that, we're looking for 50+% return on the commodities alone. And you look at the miners, you're looking at potential, depending on the size of the miners, micro or mid or large cap, hundreds or thousands of percent potentially on this next rally to the upside.
And you mentioned how we're seeing the yields rise, right? And we're also seeing the stock market sell off a bit. What do you think is really the catalyst for kind of this fear in the market right now?
Yeah, I think people are getting just nervous because the market's had a very strong run. You look at the monthly chart here of the SP 500. If we look at this pattern and just use basic technical analysis using a Fibonacci extension, which is more or less giving you a gauge of how strong a move is from a recent low to a high, and then its pullback. It'll tell you kind of where that upside move is going to be. There's still more upside potential for the precious metals for the SP 500 to continue to rally up. This here was a kind of a news-based spike. So depending if you want to discount some of that kind of washout low spike and you use another low on it, you can see there's still a little bit of upside on the SP 500. From where we are right now, there's only about 5%, 6% upside left in the stock market. And we could go into a bigger correction. And potentially, we've already started this correction. We have been seeing money move to defensive sectors over the last several weeks. We've been seeing money flow more so into bonds. Bonds haven't been rallying, but they've actually been holding their ground very well, trading sideways. Gold's been doing well. We've been seeing utilities perform very well. And when all these things are equally performing or outperforming the stock index, that is a sign that usually the stock market is on the verge of a correction. So that's where I think we are entering. We could be in the stock market correction right now. It might take a month or two to work itself out. And depending on the level of fear that we see in the stock market, if we see some fear, we're going to see metals probably and miners do well as a safe haven kind of defensive play. But if we have panic selling and a huge sell-off in the stock market, then they're going to get sucked down with the panic selling because there's going to be margin calls. There's going to be people just literally liquidating everything because they can't handle a sea of red, on their charts or on their accounts. So they just start selling everything. And that always causes a sell-off in metals. We saw it earlier this week. Stock market had a big down day. Metals got sucked down with it. And the dollar rallied because people cash out and they move to currencies. So that's kind of what happened, and that's what could happen again going forward.
That seems kind of counterintuitive, but it seems like that's what happens is when the stock market sells off initially, precious metals sell off as well, but then we see a rebound. What do you think causes that rebound?
I mean, the rebound is typically value hunters. I mean, I think we're in a super cycle to the upside for commodities. I think commodities are going to do really well for several years. And when something that everyone kind of wants and sees as a defensive play, as a hedge against inflation and all those things, when they get oversold, you see bargain hunters, value hunters just jump in and gobble up the price really quick. We saw that after the COVID crash with precious metals. They got oversold, everyone panicked, there's margin calls, and then suddenly everybody piled back in and drove the price right back up to new highs. So I think that's kind of what's happening is we're just seeing people step back in here because really the stock market's been doing well. The economy's getting a little better, but in reality, I mean, the world is in the worst financial state it has ever been. And it just keeps getting worse and worse. And, there used to be a debt ceiling, and who even remembers a debt ceiling? I mean, the debt levels are just unbelievable. It's just like a giant game of Monopoly, and every country is pretty much just cheating and making more money. It's like it's a game that never ends, but when it does, it's going to blow up pretty big. So that's what gold comes in. It's a physical asset that's known as kind of a currency, and if the financial systems or currencies collapse, you definitely want to be holding metals.
Another alternative currency that people have rushed into is Bitcoin, but now we're seeing kind of a sell-off. What is your perspective on what is causing the prices to fall right now in the cryptocurrency space and specifically Bitcoin?
Yeah, so the crypto space still moves quite a bit with the stock market. When they're selling in the stock market, we see usually the cryptos sell off as well. It's just herd mentality. The financial system is very linked. When the financial system is falling, people are scared in general, usually globally. And when people are scared, they start to sell off things, generate cash, become liquid. And so that happens. And I've been talking about Bitcoin losing its momentum. We saw a big sell-off here a few weeks ago, and it broke a bunch of significant levels. It broke this first short-term support level here. It broke another support level right here. And typically when something breaks two previous lows, that to me is the momentum has now shifted. It had enough momentum to break through two support levels. And then the bounce is usually going to be fairly muted, meaning it's probably not going to go up to the highs. And then it's going to roll over. And if you look at this chart, I always like to look at the stock market kind of like a circular saw blade. And if we were to look at this chart, you've got a saw blade going up, and just like on like a skill saw type of blade, eventually you have the peak, and then the blades start changing in the other direction, and they start to go down. So that is kind of where we are. I've been saying if we break this low and close below this low that we saw back on April 26th, which we tagged today as of you and I recording this, it's had a quick bounce off it. It's a support level. But if it breaks below there, I mean, we're going down to 35 or 30,000 very quickly. This is a crowded space. People who are in it, it's a high momentum move, meaning when it does lose its momentum, everyone is going to rush for the door at the same time. And you're going to get, just like we saw in 2018, 2019, a massive collapse, and then it just fizzles out of favor for, another potential year or two, and it'll build a new base. So I'm fairly neutral to bearish on Bitcoin because of this recent type of price action. And obviously you can see on this chart here, there's definitely some panic selling stepping in, some sellers here because it's starting potentially another leg to the downside, and looks like the trend has changed.
It is interesting. It seems like, everyone knows about Bitcoin now, and it does seem like, like the public is getting into it. And so a correction does seem kind of healthy right now, just to have people maybe slow down.
For sure. I mean, it could flatline and trade sideways between, 65 and 40,000 or 65 and 45,000 for, who knows, several months, maybe even a year. It would build a giant bull flag, a giant pattern, and then it could take a next run to 100,000. I'm just saying short-term momentum here has shifted to sideways, slash down. It's not something I'd be super excited to be long at this point. I think it needs time to heal its wounds. It's sell-offs on this chart. I mean, right now you see credit card ads on TV, and on YouTube and all those things. You can get a credit card, a Visa credit card that, you load it with Bitcoin, and you get anywhere from like 8 to like 13% return back on your money because there's these massive spreads. And I mean, generally you can't make 13% on a credit card. I mean, usually it's like 1%, 0.5%, maybe a couple, but obviously everyone's piling in. There's such huge spreads in Bitcoin and so much movement that these companies are able to try to, give these huge rewards back. And when rewards are just beyond normal sizes, it's not sustainable. So all the signs are on the wall that things are kind of reversing and going to need some type of breather before Bitcoin goes, I think, a whole lot higher. But it hasn't broken down yet. It hit support. It bounced this week. If it can get back above 65,000, then, I mean, I see like 74,000, 87,000. So it's not out of the question yet, but it's threatening to break down, and 30,000 could be the next support level.
Now, with respect again to the precious metals, if we could move back to them and your perspective on investing in precious metals, because I know you're a trader, what are the different approaches to the precious metal market when it comes to short-term trading and holding for the long term?
So there's a big difference between trading metals and investing in metals with physical. So physical, pretty much when I buy physicals, I'm not thinking of selling it anytime soon. I mean, the only reason I would sell physical metals is if they absolutely went parabolic and shot up, silver at 100, gold at 3,500 or something like that. And it happened very quickly because when moves go parabolic, meaning they shoot straight up, they usually come right back down very quickly as well. So you might as well take advantage of something that goes straight up and starts to show signs of a top. But typically what I'm looking for is I'm looking to just continue to stack, build more metals every year, own more physical, and just keep it kind of locked up with, it's really just an insurance plan in case currencies and other things collapse in value, that these metals will kind of counter some of the losses from, fiat currencies and other things potentially dropping in value. So I just look at it as a long-term insurance plan. In reality, if metals were to go through the roof, it's not exactly a good thing in my opinion, because if they shot through the roof, it usually means we're going through a massive crisis. And none of us want to live through, COVID is more than enough of a life-changing experience. I couldn't imagine, having that backed with huge financial issues globally and everyone. So I think you gotta have metals. I like silver. I always buy rounds, I don't buy coins. I buy full on just bullion. I don't want to pay any premium for some stamped on it. That's just not my style. Just give me volume, give me metal. I don't want to pay anything extra for it in terms of that regard, because I want the volume, the weight there in case I ever need to cash it out. In terms of short-term trading metals, you get in, you're trying to catch these explosive swings on herd mentality. Same within gold miners and silver miners. You're in, you're out. I don't really think too much ever about holding a miner for an investment, just because, they lose 80-90% of their value, as we've seen over the last 8 years. They're a trade. They're not an investment. That's the way I see stocks.
All right. Well, Chris Vermeulen, we really appreciate your time today and all the insights you've shared. If our viewers would like to hear more of these interviews, they can go to libertyandfinance.com. In the left-hand corner, put your name and email, and you'll be notified of all the new interviews we're doing by email. It's a free newsletter. And Chris, if people would like to find you online, where can they go?
Sure. Yeah, they can go to thetechnicaltraders.com. And I've got a blog on there. I can follow free market reports and updates every day. And I got a paid trading newsletter where I analyze the markets, kind of like what you and I just did, but I do it every morning before the opening bell. I cover metals, miners, currencies, the indexes, all those things. And whenever I do a trade, I share it with subscribers. So yeah, you can follow me there.
Fantastic. Once again, Chris, thank you so much for your time, and God bless.
Thanks for having me.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us kaiser@milesfranklin.com.